I guess the other key issue for the year ahead is the completion of 111 Eagle and its impacts on the market. I mean, how do you see that? Give us your insights into how the market will change with that building coming in.
I think a lot of owners have already reduced their rents and increased their incentives to cater for 111 Eagle Street coming into the market. I think at the back end of next year, you're not all of a sudden going to see rents drop and incentives increase because 111 Eagle Street completes at the end of next year. That's happened, and I think tenants are respective of the fact that the market at the moment offers great value, and if they're going to move, the next 12 to 18 months is the time to lock in. I think the difficult thing for owners is that 111 haven't announced any deals, and GPT to some degree are controlling the rents, because if all of a sudden they drop their rents and then it puts pressure on the other premium buildings and A-grade buildings, and so really the only way I think rents are going to drop any more, I mean they might come off another $5 or $10 a square metre, but I think if there's going to be any significant drops in Brisbane, it will be because GPT dropped their rents. And if those guys played poker, they'd be pretty good at it, because at the moment, when we talk to them, they're absolutely set in stone that they are going to hold their rents, and the incentives are 15, 16%, and that's it. So if you want to go into 111, that's what you've got to pay. So I hope they're right.
Okay, it's going to be a very important building for the market. You've done some analyses looking at the importance of the resources sector in the new stock that's come in over the last couple of years as well in the market overall. You might want to just talk us through some of the findings here.
Well, as you can see, the resource and engineering are the two major sources of inquiry. The new supply just shows you the new supply has very much attracted tenants that need Green Star buildings or want Green Star buildings or want to offer sustainable office space to their staff. And as the labour market tightens again, and talking to the recruitment firms and talking to a lot of resource groups, that's already started happening. And I think a lot of those businesses are going to want to make sure that they're in good quality buildings to make sure that they attract good staff and their staff are working in environments that they're happy in, because once these LNG projects get going and a few of these other projects, then staff are going to be hard to get, and tenants are going to want to make sure that they're in good buildings. So the secondary stock's going to suffer, but if you look at the good quality, if you actually move out the poor quality stock in Brisbane and you actually look at what is good quality stock and what's not good quality stock, the market, I believe, can sustain 111 Eagle Street, and it will sustain 111 Eagle Street. And I think beyond 111, 2012 and beyond, there's good opportunities for other buildings to be built in Brisbane. Okay.
Right then, Bill, back to you now. Just a few points to wrap up in terms of the year ahead. What sort of pieces of advice or ideas would you give clients to handle 2011?
Well, I probably wouldn't presume to give any of these people advice, because there's a pretty good bunch out there, but let's just call them Tuck's tips for 2011.
Hot tips.
And for sellers and buyers, I mean, there's a lot of my favorite sellers and would-be sellers and would-be buyers are actually in the audience, but what I would say to you is, if you're a seller in this market, you're a seller for a reason. You're either you're under pressure or you have some strategic reason to be selling your property. So, but you have to accept the market as it is. It's not 2007, so when you sell your property, you're going to take a 20 to 25%, and hopefully not the 30% number that Ray said, hit on the hypothetical value you would have had in 2007. If you don't accept that, I mean, you're really not a willing vendor. If you're not a willing vendor, you're not going to sell your property. So you have to make that decision going in, that you accept the market as it is. It might mean, you don't want to look back at it and say, well, we gave up, maybe we should have sold for $1 million or $2 million less, or $10 or $20 million less, depending on the size of the property. Because if you don't do that, well then, you still own your nice building, but you're also probably still under pressure, or you haven't achieved whatever that strategic objective was you wanted to achieve. On the other side of the coin, for the buyers, I mean, if you're a buyer in the market, you obviously were either lucky or smart and you have some cash and you're looking for opportunities. But once again, it's not 2007, but it's not 1993 either. I mean, there's not blood on the streets. There's not going to be blood on the streets for really good quality assets. So you have to recognize the opportunity that this market presents. And the opportunity it presents is to go buy a good asset at a 20 to 25% discount. So what you don't want to have happen to you is you don't want to be sitting in your office on October 20th, 2013, and all the things Kevin said are going to happen have happened, where the rents have started going up for the last 12 months, vacancy rates 10% or less and heading down, cap rates have started to compress, and sort of be lamenting all the deals you didn't do. You want to be sitting there having bought a building and patting yourself on the back about it, and the worst sort of problem you have is whether you sell the building at the next peak in 2017 or whether you put some capex into your nice new building or nice relatively new building, get all your leases reset when the next rental surge comes in 2015, 16, 17, and then just tuck it away for your grandchildren.
Okay. David, any parting words of wisdom?
I think it goes for everyone to say that, look, there are tenants out there. As I said, it's patchy, but you've got to make sure that your space is looking as best it possibly can. Make sure the windows are clean, make sure the carpets are clean, make sure that when tenants go into your building that it looks immaculate, because it's very important that the presentation is kept up, even if the space has been vacant for 12 or 18 months. And the other thing I would say is that there's a lot of tenants going to properties that aren't necessarily the right buildings for them. They're going there because the owners are putting their arms around them and cuddling them and giving them love and attention, and some owners aren't, and they're not responding quickly, and sometimes it's the first off the mark, and the tenants will respond to you if you respond to them.
Okay, excellent. Thank you for those points of advice, not advice, but words of wisdom.
Tips.
So please join me in thanking Bill and David this morning. Thanks, guys.